Hi, everybody. Thank you for joining today. My name is David King with Appulate. I'm joined today with Eric Answorth from Employers and Jennifer Spurtis. We're here to present Employers webinar for you guys today.
Okay, so everybody, thank you for taking time out of your busy days and joining this call. Jennifer and I, we feel really confident that this is going to be beneficial. We feel that some of the information you're going to see from us should be new and helpful. But if I page forward here, I can introduce myself and then I'll let Jennifer introduce herself as well. But my name is Eric Ainsworth. I am part of the alternative distribution team here at Employers. And my title on the screen here is Strategic Partnership Manager. And I think that Jennifer and I probably have the funnest jobs in the company. I've been here for 7 years, and we work pretty much exclusively with agents that are quoting and binding policies with employers digitally. And more specifically, we get to manage the relationship that Employers has with Appulate. And we've actually been a partner of Appulate for 15 years. And I enjoy getting to work with the business development team and David at Appulate, but I also get to work with the developers who created the rating environment that our employers agents as well as non-employers agents on this call have access to when they want to quote and bind workers' compensation policies. And on a personal note, as I shared, I've been here for 7 years. I'm a proud dad. I've got 4 daughters. My wife and I have been married for 26 years, and I'm sharing this with you because my oldest daughter, she works here at the company with us. So, the old adage that insurance runs in the family, it's true for me. So my daughter is a premium auditor here at Employers, and we live here in Phoenix, Arizona. But I'll kick it over to Jennifer for her to introduce herself. Go ahead, Jennifer.
Hi, good morning or good afternoon. I don't know which it is, but so I'm Jennifer Spurtis. I am a director for Employers, and Eric and I work very close together. Been with the company 2 years, going on 2 years in October. I am from the New York area. I have not been married 26 years. And I have 2 kids, and neither of them wanted to go into insurance, which is shocking. But so yeah, you got me there too, Eric. But I'm super excited to be here and meeting up with y'all.
Oh, wonderful. Okay, so I'll page forward here and keep going into the presentation. So Jennifer and I, we're going to tag team the presentation. We're going to kind of, there's a couple of slides that I'll go through, and then Jennifer's going to go through a couple of slides as well. But to kick this off, so Employers, we only write workers' compensation. We're a monoline workers' comp specialist. We've been in existence for 100 years. Prior to being known as Employers, we were the Nevada State Fund. And our footprint is nationally, right, across the country, with the exception of 4 monopolistic states that you're looking at on my screen right now. So the monopolistic state, which are Washington, Wyoming, North Dakota, and Ohio, these are states where the state fund is the only authorized entity that can quote and bind policies. So for admitted carriers such as Employers, we can't write there. But with us only selling workers' compensation, there's a couple of things that are unique to us as a company that I'll walk you through on this screen. So the first one here, if I circle it with my mouse, we have something called the Injured Employee Hotline. And this is managed by certified nurses. And when we onboard a policyholder, we work with our agents and policyholders to teach the employees that when there's an injury, as long as it's not life-threatening, to call this phone number so that the triage nurse, and the nurse will walk through the injury, and in cases where the nurse can confirm that it's a self-treatable wound, maybe a small cut on a finger, the nurse will describe to the injured employee what to do to clean it, to bandage it. And for these small injuries where it's self-treatable, we actually don't open up a claim, which means we're not relaying claims information to NCCI or the Bureau states, which means it's not affecting the business owner's EMOD. So this program that we have has been extremely beneficial to us as a company and the business owners in helping them manage their EMOD. So something new that we launched this year, here towards the bottom, is our policyholders and agents now have the ability to create their own certificates of insurance without relying on our underwriting support team through a manual process. The policyholder or the agent can log into our system, open up the policy, and launch a wizard that helps them fill out the certificate of insurance, and they're off and running. So we launched that early this year in 2024. And then as we work our way through this page up here in the upper right, so if we think about our footprint across the country, we actually have an appetite for 75% of all the different businesses and industries in the country. And there's a hyperlink here that I'm going to click on towards the end of the presentation that'll give you an idea of what our full appetite looks like. But we just wanted to give you an idea that we can write 75% of the different businesses that are sitting out there. And then this is a little unique for us as a company. We do write new ventures. So as long as the risk itself is eligible, if it's a brand new business and they've never had workers' compensation before, you can quote those policies can be quoted and bound with employers. And then something unique for us related to payment options. In the work comp industry, there's a couple of terms that are synonymous. Monthly reporting and pay-as-you-go. The proprietary product for us is called Precise Pay. So this is where a business owner will set up a separate account within their policyholder account, and when they're doing payroll, they will submit an Excel file to us electronically that identifies the names of the employees, the description of what they're doing, the class codes, and the payroll associated with that payroll period. And as they submit that file to us, we automatically calculate the workers' comp premium, and then we debit the premium payment from the business owner's checking account within 24 hours. The benefit of business owners asking us for this option is that it's real-time reporting throughout the year, and at the end of the policy period when we audit the account, we should not be sending a bill to the business owner for additional premium owed, and we shouldn't be refunding any money to the insured. So again, the intent is they're breaking even, and it's real-time reporting throughout the year. So that is something that we offer. And then another new
Eric,
item that, yes,
sorry, I didn't mean to interrupt here. We're getting a couple requests to have you speak up a little bit, please.
Okay. Yep. Thank you, David. Yep. One of the last options on this screen is we recently launched the ability for our insureds to file their own first notice of loss related to an injury. And that's where the business owner will log into their policyholder account and electronically submit a claim to us. We launched that in the spring of this year. And so it's no longer a process of emailing us information or mailing it to us in the mail. Okay, so as we move on to this next screen, we wanted to give you an idea of some of the top industries that we're writing in 2024. And so as you take a look at this, for anyone on the call that's an employer's agent now, we're largely known as writing hospitality exposures. So that's going to be a mix of restaurants, bars, taverns, hotels, and motels. And artisan contractors, we started writing artisan contractors almost 5 years ago. And if we think about artisan contractors, that will be a mix of landscaping, HVAC, plumbers, electricians, flooring installers, and painters. So those are definitely eligible for us as a company. And automotive services, I can share with you that we're largely known for being pretty competitive there. Property management. Yeah, so these items here, these are kind of the top industries, again, that are being bound with the most frequency for us as a company this year in 2024.
And as Eric mentioned before, so I'm used to, especially with artisan contractors, needing to have at least 3 years of prior workers' compensation coverage. So that's very unique to us in that we don't require that, but you have to meet our minimum payroll requirements.
Good call out, Jennifer. So yes, for the majority of those artisan contractors that we just referenced to, our minimum payroll threshold is $50,000. Yeah, thank you, Jennifer, for the call out. Yep. Okay, so I'm actually going to flip this over to Jennifer, and she's going to share some industry information about e-modification factors as well as excluding and including officers. So Jennifer, just let me know when you want me to page to the next one, but go ahead.
Sure. Entry level producers who may not understand what an E-mod factor is. So you'll hear it be, called experience mod, X mod, E mod. So they're all the same thing. So NCCI and other bureaus, they really are the ones that decide upon what the mods are going to be. There are various qualifications in order to get a mod, and premium size certainly is the biggest factor in there. The E-mod is huge because it really can swing the premium either way, high, low, depending on if it's a mod factor that is above 1.0. So a mod of 1 is just it's just your basic mod without credits or debits. I'll use that language. It just indicates the experience of the client. Is it on average the same as other people, or is it worse or better? So if you see a mod that's greater than 1, so let's say 1 point whatever, that means that this operation is performing worse than average, and they are going to be paying a higher premium because of that. And if you see a mod that is less than 1.0, that means that they are performing more favorably than the industry that they're in. And then there are worksheets that contain a ton of information for mods that you can secure. It provides, the amount of claims. It shows the premiums. Obviously the mod indicator there. So it's super important to make sure that you have the correct mod when you're submitting information to us, because when we check it, if it's wrong, we are definitely going to make changes to it, which will potentially impact the quote that you have out there. So it's just very, very important to make sure that you have the right mod in there if they do have one that's applicable. Is there anything else, Eric, that you wanted to touch on there?
A couple of things. For the agents that are out there on the call, there is an E-mod worksheet that Jennifer's referenced to. If you are not the agent of record on a risk that you're trying to quote, the insured is the only person who can obtain that E-mod worksheet. And they usually get that from the current agent of record, or in some cases, they can go to the NCCI state or the Bureau state to get that worksheet. And Jennifer's right, that worksheet is really helpful. It identifies claims at least over the last 3 years. It identifies what their E-mod is. And putting in a plug for employers, with our employers agents, when they're quoting, if the risk generates more than $5,000 in premium and the business has been in existence for at least 3 years, our system will automatically ping NCCI or the Bureau and pull in the E-mod for them in the quoting process. And if an E-mod is delivered to us, we gray that out, which eliminates the insurance agent from modifying the E-mod.
But that's only for like NCCI. Do we do it for California? I think we do California, but not New Jersey or Massachusetts or those bureau states. We don't get those automatically.
Correct. Yeah, it's not all bureau states that we do it for. California is one of them, and I think there's 2 others. But yeah, Jennifer's correct. Yeah. Okay.
Okay.
Hey, guys, before we move on, Jennifer, do you see a tab on the right-hand side called questions on the drop-down?
I see chat, but I don't see something that says questions.
Okay.
I can see it, David. Yep.
Okay. Yeah, they're pouring in pretty quick, so I just want to make sure we try to stay on top of them if we can.
Yeah.
Do you want to?
Actually, I can put it
more, or do you guys want to? I was thinking maybe one of us could work on those questions while we're presenting, just to keep things moving. But if that's too much, I don't want to. We have about 350 people in here today, so there's a lot of questions.
Eric, do you want to do this slide, or do you want me to do this slide?
I'll do this slide for you so you can take a peek. Uh, for the group that's on the call, we know that we probably won't get to everyone's question during the call. So to let you know, Jennifer and I, we are going to be providing responses to these questions, and we're going to share those with the Appulate team. The Appulate team is going to be hosting the answers to those questions within Appulate's website with a link that they'll provide after the call. So that we wanted to let you know we're going to get through everyone's questions, but not all of them here on the call. So in moving on to excluding and including officers, so what Jennifer and I can say is this is one thing that's critically important for producers to have a very good understanding of. If a mistake is made in the process of excluding or including officers, it can easily generate a financial penalty to the agency as well as the insured. So if we think about excluding officers, in the quoting process, there isn't anything that you're going to be doing to exclude an officer. It's when you're binding a policy where you're processing an endorsement to be added to the policy to exclude an officer. It is the responsibility of a producer to contact either the NCCI state or the Bureau state and confirm, is that state automatically including officer payroll or are they automatically excluding? This also depends on the business entity type, which is typically an LLC, corporation, or sole proprietorship. So, for example, in the state of Utah has taken a stance that they automatically exclude officer payroll for LLCs, but they automatically include officer payroll for corporation. So if you were quoting a risk for the state of Utah and it was for a corporation and the officers do not want to be included in coverage, you as the producer, you need to exclude the officers and endorse the policy to do that. Typically, you're going to be asking for their title in the corporation, their percentage of ownership, and their name. So the other part is there's a rejection form that has to be completed by each officer who wants to be excluded from a policy. Again, you as the producer, you are responsible for providing that rejection form to the insured. Depending on the carrier, they may be attaching the rejection form for you to the quote proposal. Here at Employers, we do that depending on the state. And that rejection form needs to be kept on file. There could be other requirements from other carriers depending on who you're working with. So two critical things when you're excluding officers, you have to endorse the policy when you're binding it to do that, and the rejection form has to be kept on file. Now, if we move to thinking about including officers, in the quoting process, if there's an officer who wants to be included in the policy, they're basically wanting to be covered by the policy, you need to identify what they're paying themselves in payroll, and you're going to account for that payroll in the quoting process with the other employees and class codes that you're working with. We typically see that officers are administrative support, but if the officer is if it's a restaurant and the officer is actually working in the restaurant on a regular basis, at that point, you're most likely going to be including their payroll in the governing class code for restaurants. But you're going to make sure to include them in the quoting process, and then again, when you're binding the policy, you need to endorse the policy to have the officer included. So you'll be getting their name, their title, and percentage of ownership in the corporation. There is no specific form that you fill out when you're including officers in a workers' comp policy. So I'm going to pause here for a second, and Jennifer, and just check with you and see, have I missed anything, or is that a pretty good, high-level, detailed information?
Yeah. I thought it was good. I have nothing to add.
Okay, so I'm gonna page forward to this last one. So there's some resources that I wanted to share with the team here. So if I go here, I'm in NCCI's website, and if I go to underwriting and I click on order mods and worksheets, again, I'm going to do a search for a risk that I know that's part of an NCCI state. And so here in the state of Arizona, we have a pizza chain called Spinatos. And if I type in Spinatos and I really narrow it down and click on Arizona, I'm doing a search here. So right away, it's pulling a record for Spinatos. They do have workers' compensation. And one of the benefits in what we're seeing right now is if there's a risk ID number listed here, it means that the business owner has an E-modification factor that's been issued by NCCI. What we're not allowed to see is what that E-mod factor is. It's proprietary to the business owner. And again, you as the producer have to get that from the insured. But if I click on this link right here, this link will identify all of the physical locations associated with the business. And in some cases, it'll start to identify other business entities that are associated with this insured. So again, the benefit to you in seeing this is you can start asking questions and potentially ask if you can quote the exposures related to these other business entities. So this is one thing I wanted to point out first. And if I click on this blue hyperlink here, some of the helpful information for you is if we start in the upper right-hand corner, so again, they do have a risk ID number, so this is indicative that they have an E-modification factor. The governing state, which is where the business is domiciled, will be listed here, which is Arizona. And the governing class code for the exposure is listed here as well, which is 9082. Now, there's going to be other class codes associated with the exposure that you'll need to find out about, but at least you know this is the governing code. And then down here, this is really helpful for you. This is the expiration date for the business owner. This is when their policy expires every year. These things that you're seeing here that might be catching your attention, you can purchase E-mods from NCCI, but you have to have written express permission from the business owner to do that. So you would need to obtain something in writing from the business owner stating that it's okay for you to be purchasing their E-mod worksheet. So again, this is the first resource I wanted to share with you. So if you don't have access to NCCI, for sure you want to get access to this because you can start confirming information about work comp exposures that you're trying to win. Okay, so I'm gonna pull this down and I'm gonna click on the next link. A second here. David, can you see my screen again? Now it says NCCI.
Yes, you're good now. Yep.
So these resources are part of the PowerPoint deck that you guys are going to receive, so don't worry about taking notes right now. This is a map of the United States. It's broken out by color. Anything in blue, these are NCCI states. So the important information here is all of these states are using the same class codes, which is a 4-digit class code. If you look at the purple states, these are bureau states that Jennifer and I have been referencing to. These states are self-governing. They are not associated with NCCI, and these purple states, they all have their own different work comp class codes and description. We wanted to point this out when you're quoting exposures, just know that a work comp class code is not the same for every state in the country. So we thought this resource in particular would be helpful for you guys to see. So I'm going to pull that down, and oops. This third one that I'm pulling up, this is a resource that's offered by NCCI that's tied to NCCI states. And this resource will actually let you see the name of the current carrier that's on the work comp risk as well as the policy number. So you can search by employer, you can search by FEIN, and you can search by address. This is a list of the NCCI states that have agreed to make this public information. So you'll notice that not all the states are listed here. So if I click on Arizona and I type in Spinatos again, and I click on search, this resource, just to give you a heads up, they want to make sure that we're not bots, and they actually will have you click through a number of these before they let you in. So I'm going to quickly go through this. If it starts asking me to do too many, I'm probably going to pull this down and show you some screenshots that I've taken. And I think I'm going to give this a couple more. Okay, it worked. Okay, so by typing in Spinatos, automatically it's pulled up all of the physical locations associated with this pizza chain in the state of Arizona. So you can click on any one of these, and I'm going to click on the first one here. So you can see now that the current carrier that's on the work comp risk is Hartford, and here's the policy number. This is not the expiration date. This is the date that you're doing the inquiry. But again, as I pull this down, it's showing in detail all of the physical locations for this exposure. So we purposely wanted to show you this resource because if you're going after an exposure that you don't control, at least you can identify who you're going up against, and you can verify the policy number and all the physical locations. So again, this link is part of the PowerPoint deck, and you don't have to have specific credentials or an account to access this part. This is free information.
Eric, we did have a request to show the state map again, please.
Sure. Let me pull this up. here's the state map.
So
Is there a
just for,
question?
no, they just asked if they could see it for just another moment. Maybe they were checking something real quick. That's probably good.
So there's one other link here. This link is going to take us to the public page for employers. And this is the section of our website that outlines all the industries that we write as a company. And if you click on the plus signs, it gets a little bit deeper and identifies specifically exposures related to that industry that we can write as a company. So this was the last link that we wanted to share with the group that's on the call here. So as I pull this down, it identifies a large number of exposures for industries that we write. So, for anybody that's on call, David, are there any other questions rolling in right now before Jennifer and I finish our portion?
We got one or two last questions. This one's pretty specific. California, September 1st, 2024, and on, the officer minimum payroll is $62,400, and the maximum is, oh, this is more somebody just telling us the numbers. Okay, never mind. Are there any sites to search up for effective dates and incumbent carriers for the state of California?
Because California is a bureau state, they don't have a resource like the NCCI resource that I've showed you. So in my own digging, I have not found a resource that any of the bureau states offer like NCCI. Yeah, so that's a good question. The bummer is it doesn't exist.
Great. And it looks like Eater asked a question. Eater, the question you had asked earlier, will they write a current lapse in coverage? It's too open-ended. You'll need to email them directly to give them more specifics on that.
Jennifer, are we comfortable providing a little bit of guidance if there's a lapse in coverage, we're not going to write that. Is that right, Jennifer?
Oh, 99.9% of the time we won't, but we are certainly open to hearing what the deal was, because I have made exceptions before, but it's not common that we will. So it's really the story behind what transpired. So it's not a yes or no for us without having additional details for each specific case. So it's really a case by case basis, but more often than not, it's a no.
Okay. If someone is using 1099 employees, and they are using, or excuse me, and they are an artisan contractor, and they are covered under work comp in California with employers. Sorry, that if someone is using 1099 employees and they are an artisan contractor, are they covered under work comp California with employers? I'm thinking it's an eligibility question.
All right.
Byron, we may need to take that one. Can you do that one, Jennifer? Got it? Or do you want to do an email back on that one?
It's a little confusing. So if our intention is to have very limited 1099 exposures. So I want to be clear with that. There are certain situations where we, because of the story about an account, we have agreed to, let's say, even write an account that just uses 1099 employees or contractors. And we've had them just add the payroll to the policy, but that was a unique circumstance. But when it comes to covering 1099s or not at claim time, it really is a claim decision. I mean, they look to see, there's a certain criteria to determine if someone is considered an employee or not. And so, in every state is a little different, but that's really more of a claim question.
Do you guys accept midterm policy changes?
Yeah. Like, what do you mean?
That's exactly how it's written.
Yeah.
If you want that, I apologize. I'm having difficulty pronouncing this. Zena, if you want to email the employers directly, the employers team. Eric, if you want to put your emails up on the screen, maybe let's leave that up on the screen so that they can have direct access to that. That way they can email you guys directly these questions as well. Maybe they can go into more detail. What is the time
And
frame to submit a BOR for it to be in effect to the new broker and, excuse me, for renewal term, and are mid-term BORs allowed?
so we need to be notified, I think it's 90, it's either 60 or 90 days in advance of the renewal. But let me pull up the document.
David, I think what I'll do is I'll make sure to provide our email addresses that can be sent out after the call. That'll
Okay.
be all over the location.
Okay, so for renewals, we must receive the AOR letter on or up to 90 days prior to the effective date of the renewal. If receipt is post-effective date, the new agent will be treated as an agent of service until next renewal. Was that did I answer that fully, or was there another part to that question?
Midterm BORs allowed?
So we do allow broker of record changes. That process, yeah. So we allow it at any point during the policy term, as Jennifer had mentioned. Once it's processed and approved, the agent taking over the policy is listed as an agent of service. They're not listed as the agent of record. They become the agent of record upon the renewal date.
That makes sense.
Excellent.
Yeah. Painters that work in tract home builders.
I believe that should be eligible as part of the
They're
painting.
just right. If they're just, I don't think that it matters if they're working for companies that do tract housing. And I was thinking about that restaurant question with the, they were
CBD?
feeding people, was it CBD?
Yeah.
So, I mean, our guidelines, it is, there's nothing in our guidelines that speak to restaurants that serve CBD. But I looked up our store class, and as long as the THC of stuff that they're selling is less than 0.3, it's eligible. So if you have a particular risk with this type of exposure, and it's truly not, higher.
I guess it's in the drinks, not in the food. They just updated that.
I don't think it matters as long as it's less than the 0.3. So whatever, makes it truly CBD versus
THC.
Exactly.
Okay.
Yeah.
On the painters that we just talked about, does it matter if they do exterior or interior?
There's no restriction.
I mean, we have just some height stuff, but that's normal.
When an agent sends an AOR, do they need to submit with a new app, or does the policy renew as is, but under a new broker?
That's exactly right. Just a new broker.
Okay.
Yeah, the policy number does not change.
Right. If the insured wants to change to another carrier midterm, since they want to get better price, will you write this under this situation?
I can answer it two ways. If the policy is leaving us to go to another carrier midterm, there is a short rate penalty that we will apply for the business owner terminating their policy early. The reverse is we will write a policy where it's coming to us from another company. We do allow short rate penalty, short-term policies. So, for example, let's say that today is going to be the effective date, but they want the expiration date to stay the same as the current policy. We will write a policy that way. The billing options go away at that point. We do require paid in full for a short rate policy, but we can write it.
Great. Will has a question here. How strong is your appetite for contractors that have not held prior work comp coverage?
So for general contractors, those are off limits to us as a company. Jennifer, for the artisan contractors, if they've been in business with no prior coverage, how do we feel about that?
We entertain them. I mean, I never did in my prior life, but we do here. So you don't have to have prior comp coverage, but remember there are certain classes that we need minimum payrolls. So they have to meet minimum payroll thresholds, but there isn't a mandatory number of years in business requirement.
And that is the last of the questions currently. Oh, another one came in. Thought we were done. Sounds like these agents need to take a look at eligibility. Oh, never mind. Okay. All right, we're good. That is the last of the questions, unless anybody has anything else to ask. We are running up at the top of the hour here, so we're going to need to end it here in a few minutes.
Everybody, thank you so much. Jennifer and I, we're very appreciative of the time and able to share this helpful information. Again, everybody that signed up for the call will be providing a copy of the PowerPoint deck and our email addresses.
Yep. And Eric, don't worry about my end. We'll this is all for you today, so I'm happy about that.
Okay. Well, everybody, we'll let you go. Thank you so much, David, and you guys have a wonderful week.
You bet. Thanks, everybody.
Bye, thank you.
Have a great day, everyone. Bye-bye.
You too.
Hi, everybody. Thank you for joining today. My name is David King with Appulate. I'm joined today with Eric Answorth from Employers and Jennifer Spurtis. We're here to present Employers webinar for you guys today.